Welcome back, everyone. Today we're diving into one of the most explosive opportunities in the energy space right now, uranium. With the world scrambling for clean, reliable power and governments rethinking their stance on nuclear energy, uranium has quickly become one of the most talked about commodities in the market. To help us break it all down, I'm joined by Jesse Day, host of Commodity Cultures, where he interviews some of the sharpest minds in the resource sector. And he's built a reputation for having great interviews, and I actually highly suggest everyone follow him. And we'll put the link for Commodity Cultures in the description below. Jesse, thank you for joining me again. This is your third time. The other times we were talking mostly about precious metals and commodities in general, but today I really want to focus on the uranium space. For the most part, maybe towards the end, we can kind of dive into gold and silver just because it's gone so high in the last few weeks or few months since we last spoke. Um, if anyone is interested, we've had a couple other interviews with Jesse in the past. You can watch him on our channel. You'll get a full description or get to see who he is and his background. But Jesse, let's just dive into it. Thank you for joining me. And yeah, let's talk uranium.
Yeah, great. Uranium's my favorite commodity, and it is the commodity that got me interested in investing in the first place into the sector, the overall commodities complex. And my documentary on uranium was my first video to really blow up on YouTube. So it was kind of the birth of the commodity culture channel, so to speak. So I'm very excited to discuss it.
Yeah, okay. I actually haven't even watched the documentary. I'm gonna have to go check it out. But I know from our past discussions, you're very active in covering the uranium space, and it's not something I actually follow too much. Besides just looking at some of the charts of the uranium producers, but I don't know anything, or I haven't been following any of the exploration plays, even the producers. I mean, spot price and how it's calculated, or what's driving the fundamentals. Unlike precious metals where gold and silver, most people can buy the physical and hold it themselves. Uranium's probably not like that, but there are some options, I think, where you can participate in the upside of the spot price, and I want you to discuss that as well. So let's start off by talking about the fundamentals for uranium. What's driving the current interest in it right now? Where does uranium fit in the whole energy mix complex? And maybe even touch onto the supply and demand balances between in the uranium market itself.
Yeah, sure. I think what's driving interest currently in the uranium sector is simply the growing nuclear renaissance that is getting louder and louder by the day. The amount of bullish headlines that we see hitting social media, hitting all the major news sites when it comes to nuclear energy and how it's being embraced by all sides of the political aisle. More and more people are starting to pay attention to that because we're seeing a ton of reactors planned or under construction in nations around the world. We saw at COP28, I believe that was a couple years ago, the big climate conference, that a ton of countries, I believe it was 29 or 39, some big number of countries committed to tripling their nuclear energy capacity by 2050. We're seeing Microsoft get involved, restarting part of 3 Mile Island, which is a fascinating turnaround story, is one of the nuclear boogeyman stories of the past. Everybody was freaked out about 3 Mile Island. Now, actually, nothing happened during that disaster. Nobody died. Nothing. Things went wrong, but it never escalated into any actually greater effects on the human population. But nonetheless, that's just one example of a few where people have been scared away from nuclear energy. And now here we have Microsoft, one of the biggest tech companies, actually restarting one of the reactors and using it to power their data centers. Amazon also using a nuclear plant to power their data center in Pennsylvania. The list kind of goes on. Of course, I know we're going to get into SMRs a little bit later. That's an emergent technology that is starting to be embraced by a lot of these big tech companies. The simple answer is that we need more energy, and we need an exponentially larger amount of energy, particularly with the rise of AI. AI requires so much energy, and it's essentially an arms race that's happening geopolitically as well. When we look at China with DeepSeek and with the way that they've approached the AI industry and their seemingly endless quest to generate more power capacity, whether that be through nuclear, which by the way, they have 150 nuclear reactors planned to be constructed by 2035, which is absolutely insane. They're also building out their coal capacity. They're doing solar. They're based natural gas, everything. They're ramping it up. A big part of this is AI. And then the other piece of that energy demand rising is, of course, a new middle class emerging in developing economies. In places like India, where temperatures can rise to sweltering degrees, yet the vast majority of the country doesn't even have air conditioning. And that story is starting to change. And as these different developing economies start to up their income to the point where they're becoming middle class, they want personal computers, they want air conditioning, they want a lot of the things that we take for granted here in the West. And that's all going to require more electricity, more power generation. Nuclear at the moment is at the forefront of that. And when it comes to uranium specifically, there's been a lot of interest in the sector. The spot price of uranium has risen quite dramatically over the past several years. I believe it was around $20 a pound, maybe 5, 6 years back, and it's now risen to just above $80 in terms of the spot price where we are today. That's significant, and there's just not enough uranium being mined today. To put that into context, there's only two major players when it comes to uranium production. There is Kazatomprom in Kazakhstan, which produces roughly a third of the world's uranium supply, and then there's Cameco in Saskatchewan, Canada, that produces roughly 20% or so of the world's uranium supply. And then, of course, you have Orano, which is a French company that has some operations around the world. Rio Tinto mines uranium. So there are other players in the game actually mining it, but in terms of sizable production, those are the two big players. And there just has not been enough new mines that have come online. There have been mines that have attempted to come online and they've run into all sorts of problems because mining is an extraordinarily tough business. And when we look at the current spot price of uranium at around $80 and change, might be around $82 as we sit here today, that is not enough of a price to incentivize most new companies to begin mining sizable amounts of uranium. I mean, we all know about cost inflation that's been going on over the past several years. The target to be able to economically mine uranium used to be in around the $70 to $80 range per pound for your average new producer coming online. And now today, that number sits probably closer to $90 to $100, depending on the operation, of course. But we're in a supply deficit when it comes to uranium. We've been in a supply deficit since 2018. This year, it's estimated that there will be 155 million pounds of uranium mined and 190 to 195 million pounds of demand from reactors around the world. So that deficit is going to continue. And it's a simple math equation. I mean, there's almost no other commodity out there, in my opinion, that has this obvious of a setup and an imbalance between the lack of supply and the ever-growing demand worldwide. So that's kind of how I put it in summary in terms of both the growing interest in nuclear energy and the supply-demand picture when it comes to uranium.
Wow, you've talked a lot about the fundamentals and the reasons for it, and there's a lot to unpack here. So there's a few points that I really I'm interested in. Is so, you mentioned new mine supply coming on or new mine operations. They would need 70, $80, maybe even $90 to produce. And right now the spot's price on uranium is about 80. For the existing producers, what kind of average cost from their existing mines are they looking at? So that way we get a gauge of their profitability of these, whether it's costing them 30, $40 and they've got 100% markup in today's prices. Um, so we can start with that. And then there's a few other questions I do want to talk about.
Absolutely. So the all-in sustaining cost for Kazakhstan is very low. I don't have the figures of what they are exactly today, but in the past they've been in the single digits to teens in terms of dollars per pound produced of uranium. They use ISR mining, and they have traditionally been a huge producer. The problem that they're facing today is that they have production issues. They have a lack of sulfuric acid. This is one of the big issues that's been facing the Kazakhstan mining operations in particular. And so that lack of sulfuric acid, which is a major input into the ISR mining method they use, is causing bottlenecks. They've also revised downward their production guidance. They revised it originally for this year, and they've revised it downward for next year as well. So they are facing multiple challenges, not to mention that that company is a revolving door for management. There's constantly upper level management entering the company and then exiting the company. We don't know exactly what's going on behind closed doors. One thing to keep in mind is Kazatomprom is a state-run enterprise. It is not your traditional publicly traded company. It is largely run by the Kazakh government. There's a lot that we don't know about Kazatomprom's operations, and they are by far the world's largest producer. So as we sit here today, I don't know Kazatomprom's all-in sustaining cost, but they are facing challenges that, regardless of that cost, is creating a bottleneck in their production, which is interesting because the story out of bears over the past several years before these production woes actually hit the headlines was that if the spot price rises sufficiently, then Kazatomprom will just ramp up production because they have such a small AISC, all-in sustaining cost, that they'll flood the market. They have so much uranium. What do they care? If uranium goes to $70, they'll flood the market and bring the price back down to 30 because they're only interested in making profits in the short term. And there was all these theories out there which were kind of ridiculous on their face. But now that the company has officially come out and said, hey guys, we're not really able to produce that uranium we said we were going to produce, that story has kind of been killed. Now, in terms, Cameco is also facing lowered production guidance, and them being a massive producer also is a significant issue at the moment. I'm actually unaware of their all-in sustaining cost at this point in time, but clearly at this current spot price, they can produce and make a very good profit because they are one of the largest uranium mining companies in the world. They've been doing this for a very long time. They have massive projects, and they are not under pressure from these current spot prices. The companies that are under pressure from these current prices are those either, as I was mentioning, newer producers who are ramping up to get into production, or companies that used to produce sizable amounts of uranium and have been in a lull and not producing for quite a while now because of the drop in the uranium price post Fukushima, who are now trying to restart their operations. They also are suffering under these lower prices. Now, there's a lot of other issues besides just the all-in sustaining cost of uranium that is facing a lot of these companies because, as I mentioned, mining is an extraordinarily tough business. So we're seeing multiple companies facing challenges. I mean, the worst of which is probably geopolitical in terms of Niger, being one of the major uranium producing regions in Africa, experienced a military coup a few years back. And since then, Orano is leaving the region. This is a company, Orano was one of the first companies mining uranium in Niger. I believe it has a 50-year plus history in Niger of mining uranium. And after this coup, a lot of the political undertones to it were we don't want the French here anymore because Niger was a French colony and the French still had a massive financial interest in the country in many ways. And so they kind of want to purge themselves of French influence. But they're a bit of a rogue operation, the new government, in terms of how they're treating existing uranium mining operations in the country. They revoked the license of GovEx's uranium operation there. GovEx, as a result, had to leave the country. Now they moved on to do something else. Now, yes, mining permits are issued for a certain amount of time. And if we, according to the letter of the law, maybe the government was in some case correct about that, but we don't know the motivations behind the scenes. Global Atomic is the major company that is ramping up to production, currently building a mine that is there. They're having very difficult time getting financing now because what financial institution wants to back a project in a place that experienced a military coup. So they're experiencing problems geopolitically with those sorts of situations. There's issues with the mining operations themselves not going as smoothly as anticipated. There's issues with the price. We're seeing a lot of problems across the board face a lot of these different miners. And so Cameco and Kazatomprom are it. Those are the only two companies producing in any sizable quantity. We've seen Energy Fuels start to enter production in the United States, which is a whole other aspect of the uranium story I'm very bullish on, which is US production, because now the Trump administration is moving forward to fast track some of these companies. And 20% approximately of US electricity generation comes from nuclear, and they have basically no domestic production to speak of. Not to mention conversion and enrichment, which is a whole other story. That Russia has a stranglehold on that industry, and of course, with sanctions, that makes that difficult. Um, but yeah, I hope that kind of answers your question on the difficulties the miners are facing. I don't know Cameco's AISC off the top of my head, but I think it's they're not sweating with these current prices. The one other point I will make before handing it back to you is that the spot price is kind of meaningless, even though I've been talking about it. It's funny because it's the one price that most people refer to because it's the most up-to-date uranium price. But the vast majority of, so spot market makes up 10, 15, maybe 20% of the market on like a good year. You get a 20% of the market being transacted on the spot market. The vast majority is done through long-term contracts. And a lot of those contracts have non-disclosure agreements attached to them. So we don't even know what the prices on some of these contracts are. So when you go to, for example, on Cameco's website, they have a spot and a term price. It's on a chart. You can pull it up, and that's an interesting way to kind of gauge where both markets are going, but both are very opaque because the spot market's extraordinarily thinly traded by a handful of individuals or organizations. And then the long-term contract market, where the main action is happening, is very difficult to actually track. So this is an issue in the uranium industry. The price discovery is completely broken, but the interesting thing is that the spot market is the one that most investors pay attention to because it's the most up-to-date information. So in like a backward sort of way, it can actually drive sentiment in the market. Even though if we took it at face value, the spot price is almost meaningless. But because so many, if not all of the retail investors and institutions too, because it's really difficult to understand, there's no other market like uranium in terms of this bizarre pricing. You got a spot price and a term price. Yeah, but the spot price is updated super infrequently, thinly traded, and the term price, well, we're making a guess because we don't even know what so many of these contracts have written in them in terms of the floors and ceilings and stuff like that. So wrapping your head around that is a little tough, but it also creates opportunity because if you're able to look at it and show, okay, the spot price is dropping, and investors, the retail crowd will get melancholy over such an event and they'll start selling and you'll see a drop in the equities. But if you realize like the spot price actually doesn't matter that much and you look at the long-term fundamentals and realize, okay, anyways, we need so much more uranium than is currently being produced, then you can ignore events like that or you can use them as an opportunity to buy as well.
Right. Um, and it's interesting because there's a couple of key points there. You mentioned the US now looking at bringing domestic production or mining online for uranium. The speech by Donald Trump at the UN, I don't know if you saw the end of it, he was kind of bashing the whole green energy space and how wind and solar is just not going to cut it, and especially in an AI driven world where the demand for energy is just off the charts, which is also now increasing the cost of energy for the average person who has, is paying the electric bill at home. I mean, it's rising. I've noticed a significant rise here even in Mexico this year compared to last. Um, so I kind of believe we are going to be on this renaissance of nuclear. I mean, it's there. And from spot going, let's say around 20, where you said it was, or 20 or 30 to 80, it really hasn't increased all that much given what's going on. And I think the upside potential is huge in the sector. Um, what I do find interesting is you mentioning companies like Microsoft, I'm sure Google, all these major players that are in the AI space are just going to continue to drive the data center demand for energy. So I want to touch on that towards the end when we get into the small nuclear reactor portion of this, but just kind of get back into the producers and that. Um, Chemical seems like it's the big one that can be publicly traded for investors. So two things. Are there any up and coming potential producers putting a mine into production that could bring supply that is investable is one thing. And then the other side of it is, unlike physical gold and silver, the average person can't go buy a pound of uranium or a few pounds. How can someone participate in the upside price of uranium just based on the spot, I guess? Because we don't know what these long-term contracts are. And I think Sprott has one ETF or something available. So maybe touch on that. But let's start with some of the companies that you think have some potential that are publicly traded that may either expand production or coming online very soon, and then talk about the Sprott.
Yes, and before I do, I just looked it up. Cameco's all-in sustaining costs are around $20 to $30 as we sit here today per pound, and Kazatomprom is actually around $30. It's risen 10% in the last year alone, so their costs are also going up. Still fine at these prices for them; they're still making profit. But just to note, in terms of companies now that are moving towards production or are already starting to produce, I'll start with Energy Fuels in the United States. They have commenced production. I believe they're looking to produce around 2 million pounds this year, which is peanuts. It's absolutely nothing, but it's a start. And their Roca Honda mine in New Mexico was recently fast-tracked by the Trump administration to move into production. So that should be coming online maybe next year or the year after and producing more. And their goal is to ramp up production. So that's a company that's kind of already started to get some pounds out of the ground. They were formerly one of the largest producers in America back in the day. I think Cameco, which used to have big operations in the US, they were the only company that produced more than Energy Fuels in the past. So they have a history of being one of the largest producers, and they are now ramping up production again. They also have a very large rare earths component. That turns a lot of people away because people in the uranium space want to access uranium miners. They're not necessarily interested in other commodities. But when I started investing in Energy Fuels, I saw the rare earths angle as a benefit, not a downside. I had a bit of a different mindset. And now we're starting to see China restrict rare earth exports. And these are metals that are absolutely crucial for military in the defense industry. And so now we're seeing a big push from the Trump administration to incentivize domestic rare earth production. Now, a lot of Energy Fuels rare earth production is actually outside the country, but nonetheless owned by them. And they have previously done a deal with the United States government, which also puts them already within the good books, and the US government's aware of them. The US government has a strategic uranium reserve. And a couple years back, they tapped some of the producing companies and companies that had inventories on their books in the US and purchased uranium from them for actually a decent amount above the spot price at that time. So Energy Fuels was one of the companies that was called upon and that did a deal with the administration. And so they've already got that government connection, and now the government is looking to push rare earths production. So the stock has risen tremendously in the last few weeks as the market has started to recognize this. So that's an interesting company to watch. I think it might be a little overbought at these levels. I think we'll see a pullback at some point, but I think the long-term trajectory of that company is very positive. I would also point to Next Gen Energy in Saskatchewan, in the Athabasca Basin, which is where Cameco is. It has the world's highest grade uranium deposits anywhere on Earth. It's like the Saudi Arabia of uranium, essentially. Now, one of the big issues with Canada is the regulatory environment is very strict. So it can take mines much, much longer to come online than most people anticipate. So NextGen probably won't start producing uranium till 2030 or later, in my estimation, but They have the greatest undeveloped uranium deposit on planet Earth, the highest grade, the greatest quantity. Basically, it's like the mother lode of uranium, the best of the best when it comes to undeveloped uranium deposits. And the other reason they're going to benefit, even if they can't start mining that uranium soon, as institutional investors continue to enter the space in a bigger way, which I think is inevitable up ahead, after Cameco and Kazatomprom, they're going to look down in market cap, and the next company that's going to be there is NextGen. They have the best undeveloped uranium deposit in the world. They have very low all-in sustaining costs. I believe it's like $9 or $10 a pound, according to their most recent economic assessment. Now, take that with a grain of salt. It's going to end up being much more, but it's a good starting point to come from. So they're going to look at that, and that's going to be the next place to deploy capital because a lot of these institutions have limits on market cap. They can't go down the chain too much and look at these smaller companies. So I think NextGen is going to be a massive beneficiary of institutional inflows. And then the other company I'd point to is Denison Mines, also located in the Athabasca Basin. They've actually technically started producing because one of their mines, which they own in a joint venture with Orano, I believe they own around 29% of that operation, has started producing. So technically, they are a producing company. They have access to 29% of that uranium that is mined in collaboration with Orano, and Orano, one of the biggest and the best uranium companies in the world out of France, as I mentioned before. Um, Now, Denison is starting to move towards production. They're putting in their environmental, all the regulatory stuff on the environmental side. They've dealt with most of the First Nations indigenous obligations, and it looks like they will eventually be given the green light. Now, nothing's certain, especially in the Canadian regulatory environment. The one snag that could come up is they want to do in situ recovery, ISR, and that is a well-established method of mining uranium, but they would be the first company in the Athabasca Basin to use ISR mining. So they might undergo some extra scrutiny because of that from the regulatory body, even though ISR is one of like the cleanest and methods of mining that has the least environmental impact. They're going, people who are in charge of regulation usually aren't that smart. And so they probably won't understand what ISR is. And so it might take a bunch of extra time. So that's a bit of a risk. But I think that Denison, now, as I mentioned, they're kind of producing already in collaboration with the Rano. But in terms of the next producer, I think Denison is next for their mine to come online, their ISR mine to actually start producing a decent amount of pounds in the basin as well. So those are three I would point people to. I have to admit, I'm woefully I don't have any information on the Australian uranium mining sector, which has a lot of great companies. I know that, but I that's just not in my wheelhouse. So that's another area to look as well is Australia.
And in terms of the spot, I think it's just the Sprott Uranium Trust that's
Yeah.
available. Other than
So
that, I don't
in
really.
terms of getting, yeah, so in terms of getting access to physical, you can invest in the Sprott Physical Uranium Trust, which is an ETF that holds physical pounds in warehouses. And so when you buy shares, you are buying a certain amount of pounds of uranium. That is probably what most people who are interested in the sector should be looking at, because like I said, mining is really tough, and you make bets on these individual miners, and they can so easily blow up in your face. So if you believe that the price of uranium has to keep going up, if you look into the thesis and you understand it, and you don't want to spend tens of hours like diving into all these companies, and you just think, this makes sense to me, where do I put my money? After doing a bunch of your own due diligence, of course, then the Sprott Physical Uranium Trust is kind of the most obvious no-brainer because you're just betting on the price of uranium going up. There's another physical fund that's traded on the London Stock Exchange called Yellowcake PLC. I believe they buy uranium exclusively from Kazatomprom. I might be wrong there, but that's another physical vehicle that investors can look into. And there's a couple of tokenized uranium projects that have come up too, where you can buy tokenized uranium. Supposedly, it's held in storage. One company, XU308, they have their uranium stored with Cameco, which seems pretty legitimate to me. Full disclaimer, they're a client of mine, so they have paid to come on my show and be interviewed. So I want to make it clear, I actually don't know, like I don't personally have any of their uranium token, but from what I can gather from speaking to them and looking into their project, it seems quite legitimate. Obviously, your own due diligence is required, but I think we'll see more of that moving forward. If it's not them, some other companies will eventually enter the space, and tokenized uranium, I think, will become a thing. So that's an interesting kind of fringe option that's out there for people who want to explore it.
Perfect. I'm glad you kind of touched on the tokenization. I'm very bullish in that whole fintech space and tokenization of real world assets. You've covered a lot of the three up and coming mines. And I'm going to put charts on all of these on the screen at admin. I pulled up all three while you were talking about them. I think is this ticker symbol for the energy fuels. From a low in April of 370, it's sitting at 1591 right now. From a low in April this past year, $6 to $12 for next gen energy. And then the Denison mines from a low of April, $1.80, it's sitting at 380. So they seem like they've gone up 100% or so. I'm gonna put you on the spotlight. If you had to choose one of these right now, which one would you invest in?
Energy fuels, that's a no-brainer because they're already producing. Next Gen is not producing. Denison is kind of producing, but not full on itself. And Energy Fuels' relationship with the US government and the push currently coming out of the Trump administration to incentivize domestic uranium production and with a focus on rare earths as well, I think makes that the obvious choice if I was to choose.
Yeah, and I like the rare earth component too. I don't, if some other fund managers only want a pure play on uranium, great, you're getting upside on both on that one, I think. So I'm going to do a little more research into these, obviously. But I'm glad you shared a lot of the information on those companies. It'll give people watching this an idea of what's on your mind and what's out there for investing on it. So I think we've done a great job covering the miners, the potential investment opportunity with them. We really did a good job on the fundamentals, whether whether it's individual countries building a lot more uranium plants or AI, which I think is going to be one of the major drivers of this nuclear renaissance we're in. We've only got a few minutes left, so we've touched on that. Microsoft and all these. Um, as demand continues to drive the AI, and we actually spoke a little bit about it in our last podcast, and we touched on these small to mid-sized nuclear reactors. So I want to get your quick thought on it, a couple of minutes, and then what about thorium? Is that even a thing anymore?
Yeah, so in terms of the SMRs, the really short answer, even though I kind of spoke about it earlier, is it doesn't matter. If SMRs crash and burn and not a single SMR is ever built, it will do nothing to affect the current supply-demand fundamentals for the uranium space. SMRs are kind of the icing on the cherry sundae, whatever you want to call it. They're like the bonus that we don't really need, but we'll take it because, hey, it's always nice to get a bonus. And it is a space that's being focused on right now. And interestingly, Russia and Iran just signed an MOU for Russia to build small modular reactors in Iran. So that's a story to watch that I think could be interesting. And of course, as you mentioned, Microsoft, Amazon, Google, they're all getting involved in the SMR space. Some of them through investment in SMR companies. They're looking at the latest technology in that space and trying to find the best way to bring it into full scale commercial production. I think before we see a mass rollout of SMRs, that's going to take 5 years to a decade, in my opinion. There's others who have a different view, who believe that actually it's accelerating far faster than a lot of people believe that it is, which could be the case, particularly with all these AI data centers needing to be powered. So I think it's worth keeping an eye on. Some people are very interested in that sector and invest within it. I just stick to uranium and uranium miners. I wish SMRs do excellent, but we don't actually need it. In terms of thorium, it is possible to build reactors that run mostly on thorium, but that's not happening now. So it would take decades, in my opinion, for that to happen because right now there are no nuclear reactors being built that are powered purely through thorium, mostly thorium. They're all still built to use uranium as their main fuel. So it's possible. You often hear these stories. What about this? They're going to start building Chinese scientists discovered some new way to power nuclear plants. Oh, that's it. Throw in the towel. Uranium's dead. It's like there's a difference between discovering something in a lab or having a concept that could work and then rolling it out worldwide in full scale commercial adoption, right? That requires investments of billions of dollars from and support of government and all this. That's what our current reactors already have that are powered by uranium. So for at least the next 10 to 20 years, in my view, I would say at least 20, uranium is going to be the primary fuel source for nuclear reactors. That might change someday, but it's not happening soon.
Perfect. That's a great summary on it. For anyone, SMR is a small to medium-sized reactor, localized kind of reactors, I think, which may have a future. And I kind of hope it does. But um, great, Jesse. Thank you. And we're gonna kind of wrap this up. Thank you for coming on our show again here and being a part of this podcast. I look forward to talking to you again in the future. And I will include the link down below on how to follow commodity culture. Thank you, Jesse.
Thank you. Happy to be here. One thing I'll say as we just wrap up is uranium is an extraordinarily volatile sector. Not everybody has the stomach for it. You got to be willing to see those big drawdowns in your portfolio. And as long as you understand and have conviction in the thesis, you should be able to make it through. But not everybody has the psychological makeup to deal with those that sort of volatility. So just keep that in mind.
Perfect. Thank you, Jesse. Take care.
Thank you.
Uranium is shaping up to be one of the most important commodities of this decade, with nuclear energy making a comeback to power AI, supply staying tight, and prices holding strong. Whether it's through mining companies or a vehicle like Sprott Uranium Trust, investors have some interesting ways to get exposure. A big thanks to Jesse Day from Commodity Culture for sharing his insights. If you enjoyed this conversation, don't forget to like, subscribe, and share. And next week, we'll be sharing another video with Chris Vermeulen, and he'll be sharing a masterclass on technical analysis. It's something you don't want to miss if you want to understand how to apply technical analysis to your trading and investing. And if you're interested in purchasing physical gold and silver, we highly suggest you check out Hard Asset Alliance. We've been an affiliate of theirs for over 12 years, and the information is in the description below. Take care, and we'll talk soon.